biggest move you made, I think the biggest gainer for you today, and one of your bigger moves. And we talk all the time about playing chess, not checkers. It's easy to get caught up in the conversations that are existing right now and try to always chase sort of like what's currently happening. When we think the move is, let's play 2-3 moves ahead and let's go where the attention will be, not where the attention is. And that may be oil. Oil had a great day today. OIH up 5%, Marathon Oil as well up about 5%. But then you look like at the Exxons, the BPs, the Chevrons up about 2 to 3% overall. They did very well. And you've said this, like even though oil's been kind of beaten down, you don't think that they're going to stay down here that long, and you're very bullish on oil. Is this sort of the beginning of the run, and should the attention be in oil right now?
I think so. I mean, this has been something that I've been kind of like beating the drum on for quite some time. If we take a look at the XLE, this is the daily chart of the XLE, which is the energy ETF. It has gotten absolutely pummeled since middle of July, and I think that a lot of this has resulted in a fear of lack of demand with travel and that sort of thing. Because the Delta has been wreaking havoc on these types of plays. I think. During this whole downtrend, I've been adding to my particular position in OIH. Now, if you look at OIH, this has been one that's actually lagged the rest of the energy industry. So this is one that you can see. We can just pull this out to the pull this out even further. This is on the daily chart here, and this came down and tested support at around 165. Just fell below that 200-day moving average last week, which was, I will admit, very painful. And I ended up adding to it just today, and I added to it last week as well. I have 100 shares of OIH currently for our Own the Chaos portfolio, and I think that this is adding to it today, adding to it all last week was the right move in my opinion, because if this does continue to do if this trend continues as far as the variance concerned, I think there's going to be a lot less worry about whether demand's going to come back for travel. Obviously, the hospitality side of things should start to look a lot brighter too. So I think that there's definitely some good things to look at as far as this is concerned. You look at the XLE, for example, this has actually moved up a little bit better than OIH has, and OIH is kind of lagged behind. When we look at the way that the XLE and even some of the oil plays have moved, OIH has lagged those types of plays. So I like the way that I like this potential opportunity over the other ones, even though I think that energy could lead going into the rest of the year along with the FANG stocks.
So what's your strategy as far as OIH concerned? Because you just added on, you were already in OIH.
Yeah, so I've been in OIH for some time. I've been in it, and I have an average of $203. So currently, right now, while we're having a great day in OIH, I'm actually still red in it. But I think that the potential for this to hit perhaps 300 by the end of the year is very much in view. So with me being down a few bucks right now on OIH, the upside here I think is still pretty substantial. So that's what I'm looking for. I'm looking for at least a $230 break, and then I may end up trimming some, but I'm holding for 300.
Nice. And I'm in Marathon Oil, so obviously a good day for Marathon today. We'll see if that continues to run. I want to be clear as well. It's easy to, one of the strategies we talk about is like the red zone days, and red days, brutally red days are usually our opportunities and looking for things on discount. So typically a massive red day for the overall market isn't when we're making moves. Oil's just been so beaten down. This was almost like a confirmation day, I would imagine.
Yeah, it grossly underperformed the market over the last couple of months, and which is interesting because it led the market for the first 6 months of the year, just about, and then it was the worst performer over the last two. I think that we could see that change and shift back to it leading the market by the end of the year, just based off of the kind of demand we're seeing, and even when it comes to renewable energy, states such as California have been talking about ramping up production in energy, in renewable energy sources such as wind and solar. And I think that that's the right way to go. And so long term, do I think that I'm going to be able to retire on oil? No, but I think it's still going to need to be relied upon, especially during peak seasons and that sort of thing, until they can get fully sustainable on those renewable energy sources. So, with that said, with the travel industry, people are going to be flying around a lot more, road trips, that sort of thing. And let's not forget the infrastructure deal too also benefits oil and the energy sector as a whole, because they're going to be needed to run machinery and all that good stuff. So I think that this is definitely a good opportunity to grab this. Even though it's moved up pretty substantially today, I think it's just getting started.